Good morning, guys. It is Thursday, July 11th, 7/11, 2024. This Bathrobe business. I'm George Yoganov. I got the coffee, and I'm probably going to yell today. So I'm going to talk about essentially one subject, my favorite subject, because it affects everything, right? Interest rates and inflation. So that's going to be the bulk of what I talk about today. I was off yesterday, and Jerome Powell testified before Congress. So we're going to talk about that, and we're going to talk about what's probably going to happen and why I think it's an absolute disaster, and also why I think this is entirely political, which is funny. Every time I mention that, my videos do have issues. I noticed this months ago when I posted a video about a lock manufacturer moving from, I think, Michigan down to South Carolina. And my video got flagged for that. And literally all I said was, this is interesting how it's going to play out in the election, since it was like 50,000 jobs that moved from a stronghold in the Midwest for Democrats into a Republican area. I'm like, oh, that'll be interesting how that plays out. And that video got flagged. So just for me saying the word political is probably going to mean this is going to get flagged as well. But we'll see. Okay. Anyway, let's jump into it. Politics aside. So Jerome Powell, yesterday, over the last 2 days, he testified before Congress. This is an article from Axios, description below. So high inflation is no longer the only risk for the U.S. economy, Fed Chair Powell said. So there's a lot said in this meeting. Essentially, what he's saying is we don't really care about the 2% target anymore, even though we said we did. We're going to probably cut rates pretty soon because there's other issues in the economy, like a weakening labor force. I think this is pretty funny considering the fact that we're adding jobs on a quarterly basis. Unemployment claims remain low. Yes, we have ticked up 4.1%, but that is actually above where the idea of full employment has been traditionally my entire life. So I think anything below 5% was always considered full employment, and we are at 4.1, up from 3.7. In addition, like I said, I share with you guys data on a monthly basis about job reports. Job hirings are strong, and unemployment claims are very low. So this is where he is saying that, because unemployment is ticking up, we may need to cut rates. I don't know how to take this as anything other than a political move. So why I take this as a political move, because I don't think it's a coincidence that just a week and a half after the debate, where it's no secret Biden really messed up, that there's now excessive pressure for him to cut interest rates. This has been a narrative in public media for a while, right? That interest rates are going to be cut regardless this year because it's politics. Now, I shared with you guys data earlier this year about how that's technically not true, that it's only actually in the last something like 40 years. I need to go back and look at the statistic. The Fed's actually only cut rates 4 times during election years. In fact, it's almost more probability that they'll raise interest rates. I think interest rates actually rose more often in election years than they fell. However, I don't discount the fact that politics puts a lot of pressure on the Fed. I don't think that there's as much anonymity. Sorry, it's 6 a.m. Give me a break. Anonymity as we think. There's definitely political pressure. There's definitely a bully pulpit, and it exists, and there's pressure on it. I think that pressure would even be heightened if Trump came to office. I don't think it's a secret that Trump wants direct control of the Fed, and even though he probably won't get it, he's going to use the bully pulpit. And previous administrations have done this as well. I think famously, wasn't it, I believe it was Nixon that kind of did that, and that's what led to kind of the issues of the 70s and the early 80s before Volcker, sorry, I should say late 70s, before Volcker came in and tightened things down. So it definitely exists. And we've seen before that Powell is not a man of strong will. He is not a man who is able to kind of stick to an outlook and stick to his principles, essentially. I mean, he didn't see the oncoming rise in inflation when it was blatantly obvious to everyone, and it only makes logical sense after what had happened with COVID. He was talking about transitory inflation. He waited to raise interest rates. By the time he did, he didn't do it aggressively enough. We're still not as high as we should be, seeing as how we're still seeing inflation numbers that are high. And I know data came out today contradicting that, but I'll get to that in a second. But Jerome Powell has not proven to be a strong Fed chair. It's pretty blatantly obvious. Now, I think this is political pressure that is being put on him to cut interest rates because after that debate, Biden needs a win. And so this way he can go back to mainly Wall Street because interest rate cuts on the whole can affect individuals, but a quarter basis point or even half a basis point don't really help the individual as much as it helps Wall Street for multiple reasons that we've outlined on this channel. So by doing that, he is trying to get his donors back. I don't see this as anything else other than that. I don't think it can be justified any way other than that. Now, you might be saying, well, what are you talking about? What about today's inflation rates? You're right. Today, let me share this article with you. Today, inflation rates came out, I'm sorry, and it says inflation falls 0.1% in June from prior month, helping the case for lower interest rates. Yes, CPI has fallen by 0.1%. It's still actually 3% for the year, right? I mean, it's still at 3%, not the 2% target. And this is a breaking story, so they'll be updating it. In fact, let's refresh the screen, see if it updates at all. Yeah, so here it is. There's more information that was not even available while I was prepping for this video. So I'll leave the link to the article below. You guys can explore that more if necessary. So CPI increased in June by only 0.1%, and it set the target to 3% for the year, June to June, so June 2023 to June 2024. It looks like there is more information here as well, but I just did not have time to evaluate that, so I'll probably reevaluate that and post it in tomorrow's video. So you're right, CPI is down. However, I'd like to share a few pieces of data with you guys. So let's just go to cnbc.com. I'm going to share this tab. Hopefully you guys can see it. So over here on gold, since the announcement, despite the fact that inflation has fallen according to today's numbers, gold is up. Gold is up about above 2,400 again. So gold has actually been falling, but now after these announcements of interest rate cuts and cooler inflation, gold is back up to a level that is essentially its record. The record is right here. What is that? 24.25. So it is just below that. So it's interesting that gold is reacting proportionally correctly as it should, that when interest rates are going to be cut, that means inflation is going to go higher, isn't it? Gold is reacting that way. Bitcoin is also reacting that way because Bitcoin was at 5,700 and now it's at 57,000 and now it's at 58,000. At the same time, oil has been increasing in price over the last several weeks and it is up as well. I have shared articles with you guys in the last couple of weeks about how airlines, and not just airlines, they're major manufacturers, are having issues with meeting their production goals because they can't hire because of the cost of hiring. I shared that with Southwest just a couple of days ago. That was the most recent story. And now I'm going to share with you guys this story from Delta Airlines. It's the same thing. Delta reported record revenue for the second quarter, but its net income fell 30%. Airlines are facing higher costs and increased industry capacity has driven down fares compared with last year. So they are facing higher costs. These are fuel costs. These are labor costs. That's inflation. Next, let me share with you guys this article from Axios. So this is the share of U.S. workers earning under $17 an hour. So most of this area is not, strangely enough, California has a weaker hiring number than Utah, but this is this is a Utah channel mostly. I welcome anyone from out of state, but I try to focus on Utah as always. So these are workers that are considered low wage workers. So Oxfam, which is I think is an arbitrary measure, but Oxfam determined that anyone under $17 is considered a low wage worker, whereas previously it was $15. So just 13% of U.S. workers in the U.S. are now earning less than $15 an hour. 2 years ago, that number was 31%. Why it matters, even accounting for inflation, $15 an hour in 2024 has the same buying power as about $14 in 2022. So all these people are now earning higher than 17%. That's inflationary pressure. And there's now only 13% of workers that earn less than that. That is That's not even a minimum wage. This is just the new baseline for hiring. If you're hiring for a position, your minimum is going to be about $17 an hour. Now, I'm not saying that's a bad thing. I'm not saying that workers don't deserve to get higher wages. I'm simply saying that this is inflationary pressure. So you can throw at me these stupid arbitrary CPI numbers all day long. I am a business owner. I hire, I fire, I buy supplies. I will have to worry about budgets. I know inflation is not down. I know inflation is increasing. I see the news stories. Even companies like Southwest, Delta, American Airlines, multiple manufacturers across the US are talking about how they're having issues hiring. We see charts of higher wages. This doesn't matter. An arbitrary basket of groceries that you bought, which, by the way, don't often take into account the fact that you can do substitutions in order to cheat this number. An arbitrary number of baskets, an arbitrary basket of numbers that you put together does not mean inflation is lower. Inflation is not lower. So what's going to happen? Well, what's going to happen is more than likely the Fed is going to cut interest rates because they have to appease the political class. And because of that, we're going to see a number of things happen. So what's going to happen? Well, we're going to see a boom in the housing market, of course. There's been a restriction in housing since interest rates started going up and up and up. Despite that fact, I've shared data with you guys multiple weeks in a row about how housing prices are still increasing. And even here in Utah, housing prices are up from where they were just in October by, I believe, 3 to 5%. That story I didn't share with you guys on the channel. But I think here in Utah, since October of 2023, housing prices are actually up by somewhere around 3 to 5%. Don't quote me on that number because I read that a couple of days ago and I didn't mention it in the channel, but it does exist. So I know that housing prices have gone up just in the last couple weeks, couple months, I'm sorry. So what's going to happen is he's going to cut interest rates. Housing is going to go through the roof. Wall Street's going to get a giant boost. Our commodity prices are going to go up because oil is going to get more expensive. Gold, silver, Bitcoin are all going to go through the roof. And then sooner or later, they're going to have to cut interest rates. But the problem is, as we've seen with Jerome Powell, he's very, very slow with these things. So it's probably going to be into the second quarter when things are actually bad again that he's going to have to raise interest rates and probably higher this time. But by then, in the face of a new administration, we don't even know what kind of climate we're going to be facing. So this is bad. This is really bad. It's definitely probably, I think at this point, going to happen because there's so many signals coming from the Fed, despite the fact that we've also shared with you guys multiple Fed chairs on the board that are saying it is way too early to be talking about this. We've had multiple bond experts that I've shared with you guys on the channel to talk about how it's way too early to cut these interest rates and they should be ticking higher. Multiple experts talking about how the fact that this is a bad idea, but I think at this point it really is truly inevitable. He's going to cut interest rates and it's going to devastate the market. We're going to see issues come up and more destabilization. So all I can say is buy quality assets, buy gold, buy silver, buy Bitcoin, buy barrels of oil if you can. I mean, honestly, when inflation starts going crazy, you can buy a bag of rocks, right? And you're going to make money off of it. The cost of gravel went up by some ridiculous number last time we had that heavy cycle of inflation because inflation raises prices across the board. So you could literally buy any hard asset and probably end up, quote unquote, making money just simply because inflation is going to do its work. So I normally I'm not very doom and gloom. I've been one of the few that argues that the economy is actually strong. That was one of the reasons I don't think interest rates should be cut. Is I think we're in a very strong labor force. I myself have 3 open positions I cannot hire for. So there's a powerful strength in the economy. But despite that, Wall Street and the political class are putting pressure on the Fed. And so it's only a matter of time until they start cutting rates. At this point, I'm not surprised if they do cut twice this year. Probably September is, I think, a certainty. August is a high probability. And then probably once again in something like October after the first cut sort of settles down. So that's it. That's the stories of the day. I'll see you guys back here tomorrow. I hope you have a productive day and hang in there.